Question 1. Financial literacy and business language. Scenario. Attorney Sarah Chun is representing May Plumbing Company in a commercial dispute. The opposing counsel claims May Plumbing was financially unstable during the contract period. Which financial document would be most critical for Sarah to analyze first to challenge this assertion? A. The company's marketing budget and advertising expenses. B. The balance sheet showing assets, liabilities, and equity at key dates. C. Employee payroll records and benefits information. D. Customer satisfaction surveys and service reviews. Question 2. Reading financial reports as evidence. Scenario. In a case similar to Enron, Attorney Rodriguez discovers significant discrepancies, steady profits in the income statement, but severe liquidity problems in the cash flow statement. What does this most likely indicate? A. Normal seasonal business fluctuations. B. Potential accounting fraud through revenue manipulation or expense deferral. C. Standard industry practice for technology companies. D. Simple accounting errors. Question 3. TVM Foundation concepts. Scenario. May Plumbing's attorney argues for prejudgment interest on a delayed $500,000 insurance claim. The insurer argues no interest is owed. Which legal principle best supports May Plumbing? A. Insurance companies must pay compound interest. B. The time value of money. $1 today is worth more than $1 tomorrow. C. All commercial disputes automatically include interest. D. Prejudgment interest only applies to personal injury cases. Question 4. Simple versus compound interest. Scenario. The court must determine interest on a $100,000 delayed payment over 3 years at a 6% annual rate. The contract is silent on the calculation method. What should the court do? A. Compound interest, $19,102. B. Simple interest, $18,000. C. No interest. D. Variable interest rate. Question 5. Present value calculations. Scenario. A client would have earned $80,000 annually for 20 years. Using a 4% risk-free discount rate, what is the present value? A. $1,600,000. B. $1,089,588. C. $2,190,967. D. $800,000. Question 6. Future value projections. Scenario. A $250,000 settlement fund must grow to $400,000 in 15 years. What annual return is required? A. 2.67%. B. 3.74%. C. 10%. D. 15.33%. Question 7. Discount rate selection. Scenario. Which rate best follows legal precedent for discounting future damages in personal injury cases? A. Corporate bond rates, 8 to 10%. B. U.S. Treasury bond rates, 3 to 5%. C. Stock market returns, 10 to 12%. D. Personal loan rates, 15 to 20%. Question 8. TVM in litigation applications. Scenario. In KGM Harvesting Company v. Fresh Network, what TVM element should expert testimony address? A. Defendant's credit score. B. Time period when damages were ascertainable and the appropriate interest rate. C. Industry profit margins. D. Plaintiff's expansion plans. Question 9. Commercial agreement interest. Scenario. A contract specifies 12% compounded monthly, but the state maximum is 10%. What should the court do? A. Enforce 12% compounded. B. Reduce to 10% simple interest. C. Void the provision. D. Allow 12% simple interest. Question 10. Statutory versus contractual interest. Scenario. Contract says 2% monthly, 24% annually. Statute is 6% per annum. What applies? A. 2% monthly. B. 6% per annum, more reasonable. C. 6% per annum, statutory, as 24% likely violates usury laws. D. No interest.